Seconds and we will ring the opening bell for the day. The SGX Nifty is indicating a quiet start for us. Positive handover from the US markets, but treading on the weak side for Asia, although they too have recovered from the lows of the day. For us, of course, the problem is completely different. We are waiting to hear something meaty and meaningful from the economic package. The finance minister has already announced 2 tranches of the stimulus so far. But the markets choose to completely align themselves and take cues from the global movements as of now. So you haven't seen much excitement. In fact, yesterday we closed in at the lows of the day. We were roughly down about almost 3%, so back to struggling sub that 91.50 mark in trade. And that's where we're currently at. But Nikuj, I guess the only silver lining is that so far in the month of May, we've seen the FIIs turn net buyers. It's a minuscule figure of $2 billion, but I wouldn't say that that's bad given the current environment.
That includes the HCL deal, Aisha. Please take it out. The minute you take the HCL deal out, this number is not going to be that, that great. But, flows are flows, whether it's HCL or whether it's Reliance. I mean, somebody's put in $2 billion, that is important. So you're right that the number is $2 billion, but strip out HCL from it, the number will not look impressive, which means money will continue to move into a Reliance and HCL or perhaps some of these consumer-dominated themes. Global cues are not that bad, but this entire outperformance which we thought which should have kicked in because of the government package clearly has not kicked in because FIs yesterday were net sellers. So last day of the week, first rates will just start kicking in. I'm just going to use my laptop here for the reference purpose to get the first rates. And the first rates, let's start with Nifty. The first rates on the Nifty, then we'll roll out to the Sensex, talk about the Bank Nifty, which is seriously underperforming. By the way, Reliance from the recent from the recent highs off by about 10%. This is despite that you've got 3 or 4 3 deals which have come out, and 2 deals for Jio are still already in the works. So that's something which is worth mentioning, that Reliance is down. HDFC Bank has been on the receiving end, and yesterday IT really took a tumble. For the first time, we've seen that IT stocks are getting smashed completely out of shape. So in terms of leadership names, you are left with very few consumer names, 1 or 2 auto names. Reliance, the leadership is getting challenged, few insurance names, and that's about it. So it's not a market where you would say, okay, I can identify a great set of winners. There you go, 91.40, 91.31, 91.27. It's falling, and it's falling very, very rapidly on a day when the global handover is not all that poor. The advance decline ratio continues to surprise us. 692 advances, 272 declines, so which is not looking bad at all. The Nifty is down by 26 points, Sensex is down by 100 points, Bank Nifty down by another 200 points. So it's becoming more like a routine that that markets will open, banks will underperform, and the Bank Nifty now is becoming the favorite whipping boy, so to speak, if you're a short seller in this kind of a market. So there you go, 0.5% off on the Nifty, 0.5% off on the Sensex, 9100 is gone, ICICI Bank, HDFC Bank and State Bank of India. So it's this, the 3 horsemen, Aisha, which were taking the markets higher, Axis, ICICI and HDFC Bank. Those 3 horsemen currently are being pushed back by the bear army. That's one casualty spot. Second casualty spot, money continues to move out of the Bajaj Finance and the AU financials of the world. So there is a big hole suddenly in the financial space, which accounts for 40% of the weightage. Imagine someone's put a harp in the heart of the market and the market is bleeding. I think that's a simple analogy I would like to use when it comes to the underperformance in financials. They overowned, there is a concern, the government package is good, but it is not sufficient and necessary to really smoothen the nerves of the market.
Yeah, absolutely. I'm alarmed to look at what's happening to HDFC Bank, and I think that single-handedly is actually pressurizing the Nifty Bank today, which is down about 1%. HDFC Bank, by the way, guys, is now struggling at that 870 level. I mean, who would have thought that this is the kind of incessant selling that you're going to see on the blue chip of the blue chip stocks like an HDFC Bank. ICICI Bank as well falls further, gets closer to that support level from where it bounced back previously, 320 to 80 on the futures for ICICI Bank, even right now as we speak. There's Innocent as well, which is seeing some pressure. There's Axis Bank, which is lower by about 1%. And it's disappointing because had it not been for some of these blue chip heavy banking names from the private banking lot, maybe the Nifty could have pushed a lot more higher. The breadth though has started off in the positive. Manappuram Finance, I was just talking about that. It's been a very strong commentary that you've seen from Manappuram when it comes to their gold loans. The AUM growth is strong. The management is seeming very, very confident. The MFI business as well has reported good numbers there. It's only vehicle finance which is weak. But the management believes that gold lending will be attractive as an option because banks are now turning risk averse, and that's really working in favor of Manappuram as we speak right now. So good thumbs up there, 4.25% higher, and BHEL, this is unstoppable, 2.25% higher even now after the kind of big move that the stock has already seen all of this week at least. There's a Ramco Cement, there's a SAIL, there's a Glenmark which is holding out. ICICI Bank is now down 2% by the way. There's Z which is under pressure, there's UPL, Infratel and Equitas which has fallen some more. So it's really back to square one, Nikunj. It's all about financials. They continue to get smacked out.